All right, you're looking at a daily chart of the Nasdaq, and you can see that first of all, it's sold off from peak of 14,446 down to today's closing of a 13,316, which is an 8% correction. And when we had the correction here from February 2nd to March 13th, this was a 10.5% correction. I don't know why, but it feels steeper this time, but it hasn't been. It's pretty similar to the sell-off. Of course, last time when it traded below the 50 simple moving average, it got right back up there within a week, and now it's been below the 50. It's closed below the 50 for 5 consecutive sessions. Also, you can see that the shorter trend moving average of 21 is starting to cross below the 50, which will turn our power trend off tomorrow. I mean, you don't need, a brain surgeon to tell you that. I just want to ask one question, though, because the stock market is the only place where we do not embrace lower prices. Nobody likes to see their stocks go down. Whereas if you went to Lululemon and they had those $200 yoga pants on sale for $100, wouldn't you jump at it? Or if you wanted to buy that nice new Ford pickup truck, and instead of paying $50,000 is on sale for $25,000, you'd be ecstatic to buy it at $25,000. But in the stock market, we do not like lower prices. Apple. Okay, I'm going to get back to the theme here, which was, the AI theme, the technology theme, the Magnificent Seven that was driving the market higher. And this is where all the profits were. And the AI technology stocks is where this correction started, because that's where the profits were. And hold on to that thought a minute as I go through a couple of these charts here. Just right after earnings, these things sold off. Microsoft, well below the 50. This one is looking really weak, but I think the worst one of all these is Tesla. I mentioned the head and shoulders pattern, and the right shoulder is like Gumby. I mean, there's your shoulder, there's your head, and there's the right shoulder, and it went down south. So we got Gumby slump shoulder here on the right side, but Tesla's just really weak, below the 50, and just looks like it's heading towards the 200 and forming another base. All right, that's enough of that. You guys, these are heavily followed stocks, and everybody knows all about these. And so I want to get to some of the carnage today before I get to some of the good stuff. The cruise lines, which were so doing so well and so strong, now they've sliced. This is a Carnival, and it's sliced its 50. So they're out of favor. This is Norwegian, and this one had a bad break there. I believe that was an earnings miss. And the other one, the strongest one, I believe, is the Royal. Yeah, it's just at its 50 here, but still, I mean, the cohort is selling off, and you just can't get ahead of that. Also, the home builders, man, this escalated quickly. Builder didn't do anything wrong. It was 156 the other day, and now it's 130. So the balance sheet's the same, their business is the same. It's just, and this is why people get frustrated with the stock market. It's like, oh, my stock was at 150 one day, and now it's 130. What the heck is it worth? Well, that's part of the game in the market. Whenever a selling starts, it turns into panic, and you can see panic selling. People want to get out because they don't know how low it's going to go or how long this is going to last. But and builder, they only had this one base here, this is ascending base, and it's been a long time. I've shown this chart here from the COVID lows of 9 up to 150. So there's a lot of profits to be taken in the home builders and the cruise lines, and I think that's just what's happening here. Pulte Homes is another one that sold off today down to its 50. DHI, which is DR Horton, had the 13F early in the week where some of the big whales were buying it. Now it's sliced. It's 50. It was 132 not long ago. Now it's 116. And these are usually slow-moving stocks. So you just can't escape it. When the market corrects, you can't escape it. So it's best to preserve capital. And the only thing we can do in the market is we can't control the market, but we can control our exposure to the market. We can control our risk in the market. So, you know, we should have sold our laggards a long time ago. You know, I sold my laggard a long time ago. I shouldn't tell you what you should do. I could say that I sold my laggards a long time ago, and I was trimming my my leaders because I don't like paying taxes. I want to hold on to them, but I'd rather pay taxes than suffer losses. I guess that's what it comes down to. Lennar is another one. Just wow. Just like 133, you know, a couple weeks ago, and now it's 117. So that's pretty tough to take. Some of the retail carnage was ELF. This is one that has been on our leader list. This is one that I had to trim here. You can do whatever you want. I'm not telling you to buy, sell, or hold. I'm just telling you that I sold this. I had it at 55s when I bought last November, and I wanted to hold it for a year. But I've been talking about this. It has not formed a proper base here for more than a year now. And so this steady, you know, you can see these gaps higher, gap after gap after gap higher, and there's no base, right? So at some point, you know, stock has to form a base. Profit takers come in, and you know, just people want to take their profits, and especially when the market's correcting like this. So the one positive for ELF today was that it closed this gap here from earnings. It had a gap there at 117.68, right? And today it closed, well, it traded at 117.29, so it did it even closed below that gap price, right? Yeah. So all in all, you know, not a bad day for ELF. I mean, if you hold it and you go, oh my God, what are you talking about? You know, 10% loss, but it filled the gap. It's still above the 50, and if it forms a base, that's not the end of the world. But this is one of the stocks that's showing relative strength, and now the market's starting to get those too. So at some point, you know, during a correction, you know, they usually get them all. So this shouldn't be a surprise. They're all getting sold because that's where the profits are. You know, like I said, they started with the AI stocks, and now they're just going around and raising cash and selling these stocks with a lot of profits. This is Celsius. And you can see the gap higher, trade sideways, another gap higher, but this one's still above its 10, even though it lost, you know, 5.5% today, still holding its 10 EMA. And but like I said, there's a lot of profits to be taken here as well. And you know, it's just a risk-off environment. Dick's Sporting Goods. Speaking of lower prices, you can get some good buys at Dick's. This one just traded down to its 10 today. They have earnings next, gosh, what is this? Wednesday, the 22nd, I believe. Yeah. But you can see this is setting up in a base. Looks pretty decent, above the 10. One of the stronger stocks. And, you know, right before earnings, it's a mixed bag with buyers and sellers. You know, you don't want to get too aggressive ahead of earnings, and then you don't want to miss out a big earnings surprise. This is Lululemon. I did mention there was 200 pants on sale. $200 pants on sale for $100, and this one just traded down to its 50 today. Once again, they have earnings coming up, so you know, we're just gonna have to wait for the print here. If you look at the bigger picture, you know, you can see this, you know, big consolidation period. And this is, you can kind of consider this just like one big long handle. Here it's very you know, undecisive below that 400 level, but a good report, and this one could spike. But you know, pretty tough today. There's a lot of stuff that is selling off, and selling off sharply. Arista Networks, this one, if the market was trading like it was, you know, April, May, and June, July, this one would be ripping higher. It's getting pulled down with the market weakness. It was still up today, but and it's still set up in a base. I really like this stock here. I think it's just ready to go. It's just the market conditions are just not conducive to stocks trading higher. Cisco reported earnings last night, had a good response, real good earnings report, and forward guidance. You know, they're always conservative, but a nice 3% move for Cisco Systems today. And the other one that I like in the tech space is Google, which we have on our watch list or our ready list here, and it just formed this base here. You could maybe see it better. Short little base here on the weekly, but holding its 10, and right there about 130. I like it in that area. Okay, let's get to some of the good stuff today. I know it's in the oil and gas. The XLE was the only sector up today. Permian is one that we've had on our watch list, and you can see why this long, consolidation period, and now starting to push away from its base. That one looks pretty good. Valeris is another one. Nice long consolidation. You can see the cup with a handle pattern here, and man, it really burns me. I hope this oil and gas trade does not last long because it's inflationary. I got nothing against oil companies. It's inflationary if these things start ripping. This is AMR. I showed you this one. I don't know. It's been on our watch list, but long consolidation, 61 weeks. And now it's starting to push away from its base here. It's up nearly 5% this week. I saw it over 200 this morning, and it just decided to pull back with a general market weakness. Yeah, it hit 202.20. So maybe that's foreshadowing here. And Constellation, this is one that we've had on our watch list in the past. You can see the very distinct cup with handle pattern, and now it's broke out. Allowed the moving averages to catch up here. The 10 EMA caught up today, and it's just, even though it was down today, this is showing relative strength as it pushes away from its base. Anyway, that's all I have for today. Like I say, you cannot control the market. You can only control your risk in the market and manage that risk appropriately. You don't want to be too exposed. I've been reducing exposure even on my stocks that I've had for a long time, and I have a lot of profits in them, but I just do not feel like watching them come down every day, drip drip type of activity. And today it was a whoosh. I do have one more thing, but before I get to that, I'm going to show the Nasdaq, because on Monday I mentioned this candle here where it undercut the low and closed at the high, and that's kind of what I'm looking for. Ever since that day, we've had 3 inverted candles, where the index closes at the daily range. And so what I would want to see tomorrow, or what, the market's going to do what it wants to do. But if it does, open and gap down lower and trades lower for most of the day and then rallies up, and even if it closes, at a loss tomorrow, if it can close near the high of the daily range, maybe we can get a reversal. That would be called a pink rally day, and that's kind of what I'm hoping for. The shorts have had a nice, they've been killing it lately, right? So they should be taking profits Friday afternoon. So I would expect some sort of bounce. This market is really oversold. Like I said, this is an 8% move. This pullback here was a 10.5% move. It just, when you're in a correction, it just feels worse. I don't know, but it's not. It's we still have a couple more percent to go to catch up with that correction back in February and March. And anyway, I said one more thing in honor of the great Steve Jobs, and that is tonight, Applied Materials reported a really strong quarter. They raised their guidance, and the stock is up 3%. The semiconductor stocks, which I didn't get to, but you guys know how NVIDIA is doing, and AMD. These things are a mess, and we can't have. We can't. I don't think we can have a real serious rally without the semiconductors participating. This is ACLS. They're all below the 50. These things have been hit pretty bad. Here's RMBS. Gap down on earnings, looks terrible. MobileEye. This is one Intel uses as their ATM. Nice IPO, was doing well, and then it just fell out of bed below the 50 here. Looks terrible. Is there anyone? Oh, Marvell was up today. Yeah, so hopefully Applied Materials can get this group going here. NVIDIA's, they've had everybody and their brother raise their price target, 600, 700, 800, 1,000. Who cares? Throw a number out there. They're going to report earnings next week, and we'll know the deal next week, the reaction. But there's just way too many eyeballs in this stock for me. So I got rid of this thing. It's just, I don't care if it goes to 600, it's going without me. It's way too noisy. But if the AI theme is intact, this thing is going to deliver. It's going to have to. Otherwise, that theme is going to be dead in the water. And I did say one more thing, and I got off on a tangent there in the semiconductors, but ROST Stores is up nearly 6% after hours, and I really like this base here. You could see on the weekly chart here, nice sell off. And this is what ELF has to do. Just sell off for a few months and, get all the sellers out of there. The sellers get exhausted, then the buyers come in. And this one looks really good to me. You could see this symmetrical type of cup with a little handle. And tomorrow it looks to me like it's going to break out, 6% move, even in this crappy tape. I'm sorry, excuse my French, but this is really a tough tape. And anyway, that's it for today. And like I say, we cannot control the market, but we can control our exposure. And we're never, ever going to give up